welcome back. A flurry of deals in healthcare announced this week as JPMorgan kicks off the most well-attended investor conference in the industry. The annual JPMorgan Healthcare Conference underway right now in San Francisco, with more than 8,000 investors and healthcare professionals and 550 global healthcare companies attending and presenting. I spoke with JPMorgan Chairman and CEO Jamie Dimon from the conference, where he said debt capital markets are wide open right now, and there are indications that capital markets activity is coming back this year after a 2-year drought. He still, however, is not convinced of the soft landing to come. Watch.
And I think the table I just sat at for lunch, they were telling me it feels better this year. And as you mentioned, a couple of deals announced this morning, and I think a lot of things will be happening in healthcare this year.
For coming off of this little bit of a drought in capital markets activity, I'm wondering if you're getting a sense that the logjam is going to break this year in 2024.
Yeah, I think you've seen part of the logjam actually broke early last year. So you see IPOs, not as many, but they're coming back, just slightly different types. So a couple of big healthcare IPOs. M&A you're seeing. If you want to do a huge deal, you could do a $30 billion deal, $30 billion financing probably today. So yeah, it's open. So as long as we have, soft landing ideas and credit spreads stay low and markets stay high, you're still going to see quite a few transactions. I always remind people you have pipelines open and close. So yes, it's pretty good today, but you can never quite know. It doesn't take a lot to change sentiment. Right now, the market's expecting, it's kind of priced in a soft landing. You see that in equity prices, credit spreads being very, very narrow. So the good news is the consumer has jobs, wages are going up finally more at the lower end. Home prices are up, which is good for their balance sheet. Credit is normalizing, but it's still lower. Stock prices are up. Consumers in good shape. But the extra money that they got during COVID, trillions of dollars, that's kind of running out. And it looks to us like it's going to run out sometime. It's been pushed out and out for a whole bunch of different reasons, but it runs out this year. The government has a huge deficit, which will affect the markets. But I'm a little skeptical in this kind of Goldilocks kind of scenario. I still think the chances of it not being a soft landing are higher than other people. That's not terrible. It might be a mild recession or heavy recession. Obviously, all of us in business have to know how to deal with, the ups and downs of vicissitudes of the economy. But I do think the cross currents are pretty high. The money running out, rates are high. QT hasn't happened yet. QT may bite. I expect it to, by the way, that you'll see more volatility, particularly unwanted in Treasury markets because of QT.
So are we going to see that recession this year?
Yeah, it's a possibility. I think they did the right thing to raise rates. I think it was a little late, and I think they're doing the right thing just to wait and see what happens. And as you said, it takes a while to see the full effect of that. And there are other financial conditions out there, but all of those factors may very well push us to a recession, and as opposed to a soft landing. But the other thing we have to mention, the cross currents I'm talking about, it's not just the fiscal spending, QT, what's happening to COVID money. It's also what the geopolitical situation is. You can't look at what's going on in Ukraine, the heartbreaking humanitarian crisis, the potential, it's gone on now for almost 2 years. And of course, the terrorist activities in Israel. Now you have a widening war in the Middle East. These things which affect, and all these things affect oil, gas, food, migration, all economic relationships around the world, economic, military alliances. I put the geopolitical stuff as something you can't look at this year and say that it will not have effect. It may very well. That stuff is about the freedom of the Western world for the next 100 years. So I'm not comparing that really to the economy this year. And so, for JPMorgan, we're going to serve our clients in 2024, 2025, whatever the environment brings. We always say that we don't know what the environment's going to be. Look at the range of outcomes. Can we handle them? And, the answer is yes.
Where does the Fed fit in, Jamie? Right now, it's pretty much priced in. We're going to get 3 rate cuts this year, possibly 2 or 3 rate cuts in 2025. Do you agree with that?
I'm a skeptic. I think that because of fiscal spending and other factors, and let me list them for you for a second. I look at a lot of things and forget just economic models for a second. $2 trillion of fiscal deficit, the Infrastructure and IRA Act, the green economy, the remilitarization of the world, the restructuring of trade are all inflationary. And that looks a little bit more like the 1970s to me. So I think there's a chance, that people should be prepared for that inflation comes down, but then bounces around 3, maybe even bounced up a little bit, and those implied curves will change. And then, are people ready for that? I'm not sure, but I just give that a higher chance than other people give it.
Let me layer on to that all of the new regulations that are coming, and of course I know you've spoken quite a bit about this, the required capital levels for the major banks as we are now nearing the end of the comment period for the Basel III endgame proposals with regulators. What is your assessment of these proposals?
Yeah, I can't wait for you all to see and read, if you're willing to, the hundreds of pages of comments that are very specific about operational risk capital. These capital costs will be embedded in everything. And some people have said to me, well, big corporations can afford it. No, but big corporations will also pass it on to their customers. So it will be passed on in a million different ways. What bothers me the most is no one ever looked at it and said, here's the outcome of these changes. And we want these outcomes. The outcome should be what you want. So, the mortgage business is leaving banking, a lot of credit's leaving banking. And if that's what the regulators want, so be it. But I do have other serious concerns with this thing. We'd have to hold 30% more capital in the U.S. than competitors, foreign competitors in the U.S. I don't think that's appropriate. I have strong objections to it. I think the work was poorly done.
Is it more of an issue of how much capital you have to hold relative to how much capital your foreign competitors are holding? Or is it more of an issue that these rules are really targeting the most complex and large, in size institutions, which of course is JPM?
Yeah, it's both.
There's also new regulation coming on Bitcoin, and you famously said recently that you would shut it down if you were in government. Can you give us more clarity on that?
What I've always said is that Bitcoin doesn't have value, and I don't care what other people do with Bitcoin, but what I was also pointing out is that the actual use cases are sex trafficking, tax avoidance, anti-money laundering, terrorism financing. It's not people just buying and selling Bitcoin. There's no value to, if you're buying and selling Bitcoin.
It's been a rough year. A lot of questions after the Silicon Valley Bank failure. Of course, JPMorgan acquiring First Republic. Do you see further fallout there? And are we still talking about an incredibly tight lending environment?
Yeah, so there's different things. So the banks are very sound. When First Republic happened, we told you all, I think, that was like the last domino, provided that rates don't go up much higher, which they haven't, and that we don't have a major recession, which we haven't. I think if rates go up, we have a major recession. Some banks will be in stress, which is normal, by the way. The other thing I should point out about regulation, they didn't fix the SVB problem, which they should have focused on a little bit more. And yeah, I think lending tightens against standard just because people are a little worried about the economy. That's kind of normal. There's a little wishful thinking on the government's part that the economy will get stronger. It may get weaker by the end of the year. And so I would be thinking about how can you grow the economy right now, and I think it's important for the future of the society that we have a very healthy economy.
Jamie, what about your own investment cycle? I mean, your technology budget is half of NASA's total budget. Obviously, this is a priority for you, $15 billion, and you were for a long time competing with centuries-old institutions, but now you're competing with Apple and Google and Amazon. Is that right?
Yeah. And, and we're not just competing with them. There are also new technologies you always have to adapt to, the big ones being digital, cloud, AI. If you're a legacy company, which doesn't mean you're bad. It just means, we've deployed huge amounts of technology in the past, which now has to be put into, new data centers and new databases and, to make it accessible to AI or to digital and stuff like that. So, the investments are huge.
Is there anything you want to say about artificial intelligence and on a practical matter, how it's going to change our lives and our banking?
It is, first of all, to have it. We just put a woman, Teresa Hessenreiter, on our management committee who's our chief data architect. And so it's both AI and data because they're directly related. And that's how important I think this is. We already have 300 use cases against risk, fraud, credit, marketing, movement of money, trading, hedging. It's real. And you got to get from a management standpoint, it's got to be part of the management conversation all the time. It's going to change a tremendous amount of stuff. In healthcare alone, it may come up with new compounds. It could do a better job diagnosing diseases, preventing diseases. God knows what it's going to do for people. It may have some downside. Very hard to figure out how you should regulate it, but there might eventually have to be some regulations around it. And so, and the bad guys are going to use it.